Great. I'll give it a minute or two. Let people file in. Welcome to everybody who has joined so far. I think we'll give it maybe another minute or so before we get started, but bear with us. Thanks. Thanks so much for joining. So we've got 12 participants so far. Why don't we go ahead and get started just so we're not running late. Welcome everybody. I'm Danny Scull. I'm a policy advisor, senior policy advisor with E3G, focused on the World Bank, the international financial architecture, all things sort of public banks and development. And I am here with some of my esteemed colleagues today to have a run through of what to expect from the World Bank IMF annual meetings this year. They're next week, so we'll talk about developments that are coming down. What to expect, what not to expect, what's important, why. And we did this in the spring ahead of the spring meetings and got some great feedback. So assuming today goes smoothly enough, maybe we'll make this a regular occurrence. So thanks so much for joining us. We are E3G. We're a climate think tank. We're obviously invested in the international financial architecture and sustainable development because in order to address the climate crisis, we need to build an international financial system that can deal with crisis in the moment, which means not only sort of more money into the system for sustainable development, but also changing key elements of that system to then remove barriers and unlock finance flows. And that covers sort of Bretton Woods institutions and other fora. So we'll get into all of that in just a moment. But quickly, I'd like to introduce my fellow panelists. We're going to talk about a few different things. First, we'll have Rob Moore, who's our Associate Director for Public Banks and Development. He's going to set the scene a bit, talk about some of these international politics, G20, UN, World Bank, IMF, and how they connect. And then we'll pass over to Kate Levick, who is our Associate Director for Finance and Resilience. She's going to talk a bit about the role of the IMF next week, as well as how it relates to debt and risk, and how those sort of parlay into increased climate finance. I'll then speak a bit about the role of the multilateral development banks, including the World Bank as sort of the headliner next week. And then we'll get to Laura Sabogal Reyes. We'll then talk about sort of the delivery mechanisms of finance, including country platforms. So that will be the plan. At 1:30, we will try and wrap up so that we have plenty of time left over for Q&A. And I would encourage everybody to use there's a Q&A function in the chat, so you can drop questions in, and then we'll try and answer them and queue them up for the appropriate speakers. So without further ado, we will now pass to Rob to give us a few words about the big picture and how the IMF annual meetings, IMF World Bank annual meetings, sort of sits within that framework. So thanks, Rob. Over to you. Oh,
Maybe start. Thanks, Danny. So hello, everyone. I'm Rob Moore. I'm the E3G's Associate Director for Public Banks and Development. Previously spent a number of years in the UK government, including as the lead climate finance negotiator for COP26. So I've spoken with some of you in that capacity, but this is obviously a little bit different. So just to set a bit of the scene, and then colleagues are going to come in on specific aspects, and obviously I'm very happy to take questions in the chat. It goes without saying that the geopolitics around climate finance are not in a bubble, but even if they were, they would be quite tense this year. So obviously you have many of the wider geopolitical factors you'll be more than aware of. But then within the context of climate and development, we have increasing climate needs in the order of magnitude of trillions per year in developing countries, many of whom are in rising debt distress. On the other side of the coin, you have sort of shrinking aid budgets from a lot of the conventional providers of climate finance. And then looming over that, you have the need to reach agreement at the COP on a new global climate finance goal in that sort of really, really challenging context. And those were negotiations that were initiated after the decision in Glasgow. Parallel to that, you've actually got quite a lot of technical progress that's been seen both in the financial sector, and Kate Levick, who will speak next, is our sort of real expert on that and some of the frameworks that have evolved around aligning private finance, and also lots of work within the development finance sector around how you improve the efficiency of the multilateral development banks, which are the banks that really provide most of the channeling of funding from developed to developing countries to take climate action. But that technical progress has led to a degree of improved measures to implementation, and Danny will talk a bit about that, around how do we take these institutions that we provide public money to and actually make sure that they're doing the most that they can possibly can do with that money. There's been lots of work to sort of maximize the impact of MDBs in that regard. But there is a little bit of a risk of complacency at the moment, and what we're seeing is a sense that having done a lot of that technical work over the years and started to enact some measures, that there's sort of a decreased political momentum around really putting the squeeze on the banks. Where this really hits the climate politics is that the annuals is probably the last point before COP, where there is a chance for finance and climate ministers and development ministers to come together and send a sort of really big political signal on how there might be a way forward to break the impasse in this sort of really big gulf between the needs that developing countries face and the actual finance that's flowing, and that is both private finance and the sort of international support and the aid that is often talked about in the negotiations. We're expecting the annuals themselves and the outcomes, with the exception of that sort of political signalling, to probably be quite technical in nature as regards climate. Lots of work on improving the transparency of the development banks and how they work together on different delivery models. The one exception to that will be the replenishment of IDA, which is the World Bank's soft window, which means the one that provides concessional support or below market support and lots of grant-based finance to vulnerable countries. It's the biggest provider of adaptation finance in the world. The replenishment of that will conclude shortly after COP, and there is a concern that that replenishment might not meet the expectations that the bank management have placed on it of being a sort of world-beating, record-setting replenishment. And that'll be really material, and the signaling on that will be really material around adaptation finance and providing faith that countries are going to increase that in the coming years. The other really big thing that we're expecting to happen is a meeting of the G20 finance and climate ministers, and potentially the Azerbaijani COP presidency may be convening negotiators on the new collective quantified goal, similarly climate and finance ministers. And that will be really important in sort of again, being that last moment to really try to bridge the divide that has emerged in the negotiations and the continued polarization that we're seeing between the global north and the global south. Our view is that there is a route to an agreement at COP that will be very challenging, require quite a lot of political leadership for everyone to be a little bit uncomfortable, and to try and find creative solutions that can reach this goal. In the reality, we know that these needs are in the trillions. At the moment, the politics are such that it's relatively unlikely that there's going to be a real step change in that context of declining development budgets to right now commit to, within the next couple of years, a many-fold increase in public finance. It doesn't feel like that's where the politics are. So how can we navigate a route to an agreement in Baku that provides a bit of a vision for what might need to happen in order for those financing needs to be met? And that's likely to mean a combination of what we've seen to date, which is that conventional international support and that being increased and improved in quality, but also how it links with those wider structural questions around reshaping private finance, ensuring that countries have the fiscal headspace to actually lend, because you can't take climate action if you can't finance that action. One of the key things there is what will happen around the base of contributors for that goal, and that's really dominated the politics, and that's partly that within the UNFCCC, the countries that are responsible for actually providing the finance are the countries that signed up in 1992 under the UNFCCC annexes. And there's been a bit of a discussion around whether there's a need to sort of update and increase that, increase the number of those countries to incorporate some of the wealthier non-contributors. That has been very difficult politically within the UNFCCC because of concerns of who precisely those countries would be, and not allowing those countries that are already intended to provide finance off the hook. And I think there's going to need to be some sort of solution at a political level and some sort of agreement around that. And again, this will probably be the last time before COP that the people that can make that happen will be in a room together. I will conclude there, and I think I'm handing over to Kate to take through maybe IMF and some of the sustainable finance aspects. Thanks, Kate, over to you.
Awesome, thanks, Rob. So, hi, I'm Kate Levick. I'm the E3G Associate Director for Finance and Resilience. So obviously work very closely with Rob, as well as other E3G colleagues. So I'm just going to say a bit about the background on the IMF part of the IMF World Bank meetings. So I'm sure people on the call have got some very deep knowledge of this and some maybe a bit less so. So maybe it's worth saying for background, the IMF is at the apex of the global financial system. It's widely respected as a source of analysis and data, but crucially, it's a source of liquidity and support for countries that are in financial distress. And at this year's annual meetings, Kristalina Georgieva will begin her second term as Managing Director of the IMF. And that term will run until just before 2030. So at these meetings, we can expect Kristalina Georgieva to set out her forward agenda. And we can, I think, also expect that the wider surround sound discussions that happen next week will influence what she actually does prioritise over the next year, particularly. However, in the context of climate change, it's well understood that Georgieva's high ambitions about integrating climate into the work of the IMF have, not necessarily gone as fast in her first term as she might have wished. There's been a lot of internal institutional inertia in making some of the changes that she's been trying to create. So the IMF to date has taken modest steps to increase its work on climate change, but it's also fair to say that the slow pace of that change has been criticised for an overall lack of ambition. So, to go into more specific examples, after much debate, the IMF board authorised the use of special drawing rights, SDRs, to purchase hybrid capital instruments issued by prescribed holders, which is very jargonistic, I know. This is basically a way of bringing more liquidity into the international financial system. And most multilateral development banks qualify as prescribed holders. So there's an opportunity to use this liquidity and then pass it through multilateral development banks. So the IMF set a cap of $20 billion on that, and will be reviewing that policy once they reach the 10 billion threshold. There's opportunities to use this to achieve a range of key goals around the world. The use of SDRs as hybrid capital by banks, for example, would take ones that are currently just sitting on the balance sheets of some of the richer countries that are also prescribed holders, and could use those to enable additional bank lending for climate, for nature, for development investments. So we would like to see more creative use of those SDRs. But that's, a very specific instrument, a very specific action. There's a broader agenda that we would want to see the IMF see set. We want to see the IMF's shareholders, the countries, and also its management, the staff, collaborating to launch an evolution process for the institution. We want that evolution process to equip the IMF to provide adequate support, among other things, to the global response to climate change and biodiversity loss. Now, we've been seeing an equivalent evolution process running at the World Bank for about the last year or so. So it makes absolute sense that the IMF, its sister organisation, would also run an evolution process. One of the important steps in the climate area that the IMF did take over the last year or so is to create a resilience and sustainability facility that can potentially provide support to climate vulnerable countries. So that's been an important step and one of the achievements of the Georgieva agenda. However, it is still too restrictive. It's only open to countries that are already in an IMF programme. And actually, many developing countries don't want to join an IMF programme because that is seen, in particular by bond markets, as a vulnerability, an admission of defeat. And that lending may also bring conditions that those countries might find very burdensome. So we would hope that the facility could remove that requirement and support countries whether or not they were already in an IMF programme. And we'd also want to see increased collaboration with the World Bank so that the overall support package for those countries sort of tallies up across what they're doing with those two DC-based global institutions. And then the final thing I'd say in terms of resilience, as you know, climate impacts this year in 2024 have been unprecedented in terms of heat, drought, floods, storms. And of course, we're set to see that getting worse over current years as emissions continue to rise. The IMF and also the finance ministers at the G20 meetings that Rob mentioned, they need to get ahead of this agenda, put in place sort of measures that will actually deal with the economic and financial impacts of this, or be capable of doing that, basically plan for greater resilience to future shocks. And as an immediate step, we'd certainly want to see the IMF making climate resilient debt clauses, which sometimes get called CRDCs. We'd want to make them a standard component in its loans. So MDBs, the multilateral development banks, they have already started to do this and integrate CRDCs into their lending. So now it's time for the IMF to do that too. So I'm going to pause there, and I think I'm handing over to Danny.
Thanks so much, Kate. I just pointed out, I saw a few questions in the chat about only being able to see Kate when Rob was speaking. I just note that I believe you guys are at the same table sitting in the London office. So I would just ask from here on out if whoever is talking could unmute while the other mutes. It's a little bit of a pain, but then at least people will see who's speaking while you're speaking, if you know what I mean.
Sure. I'm not really sure why that's happening, Danny. Maybe it's a bandwidth issue, but we should be able to see both of us, I believe.
No, as in it only shows the speaker. So I think it was you were unmuted while Rob was speaking, so it showed your face while he was talking.
We're sharing the same mic. Okay, that's the issue.
Yeah.
Okay, we'll deal with that.
Cool.
Thanks.
So we'll jump back and forth. Yeah, no, that's what. Okay, so back to the issue of MDBs at the World Bank annual meetings next week. So as Rob alluded to, MDBs are crucial to the climate finance agenda. I mean, there's simply no way to hit the numbers that academic reports have shown the needs to be without the MDBs, and the reason for that is because they leverage. As opposed to sort of bilateral lending or aid that's dollar in, dollar out, MDBs generally take contributions and can leverage it on capital markets and send $4 out the door, or 6 or 8x, depending on some of the more innovative tools they use. So for that reason, there's been this evolution agenda for the last 2 years for particularly the World Bank for a bigger and better bank. Ajay Banga stood on stage in Marrakesh and said we're going to do better reforms and then bigger reforms per the shareholder requests. And some of those big reforms are efficiency measures, the CAF reforms, capital adequacy framework reforms, as well as potentially capital injections. And that's really how you could build a bigger MDB system to get to the numbers that we're going to be debating at COP, as Rob suggested. So just quick run through of what the bank has done. They released their development committee statement last week. I'd encourage everybody to go on the World Bank website and have a look. they can point to a lot over the last two years to say that we have engaged in this process. We've done a lot of technical work, and it's resulted in some real operational changes. The mission statement, or I should say the vision statement, to include sort of global challenges, the climate resilient debt clauses that Kate alluded to, the global challenge programs, climate diagnostic reports, incentives for global challenge borrowing, so cross-border challenges, as well as sort of expanding their guarantee portfolio, and potentially launching a securitization warehouse for the private sector through IFC. So there's a lot of things that they can say. Look, we have heard you. We are working on, improving our operations. So I give them a decent grade on the better so far. I mean, governance reform is probably next up on the agenda, but so on the bigger. They have not hit the scale that I think was envisioned at the beginning of this process. They meaning the World Bank and the MDB system at large. But the different banks, I think we could give them, some different grades on how they've done. But as far as next week and what we would like to pay attention to, a few announcements. One was actually just put out this morning. The equity to loan ratio at the World Bank was decreased to 18%, which will unlock, they said, 30 billion over 10 years, so about 3 billion a year. That's important. It brings the total of sort of new finance that the bank can push out to, I think, 150 billion over 10 years. But even that is, 15 billion a year. That still falls far short of what we need. The other main announcements I think that we should probably be paying attention to are the finalization of the corporate scorecard, which is how the bank tracks their progress. It has potential to shift lending via sort of maybe target setting in the future, but at the very least showing how bank lending is affecting outcomes on the ground. And I think what it may show, at least as far as climate and greenhouse gas emissions are concerned, is that bank lending is a very small piece and probably doesn't move the needle a whole lot, at business as usual levels. So there may be a hook to go bigger on some of the climate finance based on the results that we're going to see. So other sectors might be more difficult to track, gender, digital inclusion. So we'll see what the bank has come up with. There will likely be an announcement on enhanced callable capital, which is not the sort of original callable capital ask of the bank, which is to say the bank can draw on this callable capital that shareholders have set aside in the event of catastrophe. It's never happened. It's not very unlikely to happen. But without giving credit to that, the bank can't expand headroom by the tens or, the MDB system, hundreds of billions that it could potentially otherwise could. This enhanced callable capital is sort of an additional tranche of callable capital, and it's sort of a middle of the road solution to say, look, we've done the efficiency exercise, but not the way that it was sort of initially envisioned by the G20 experts. So we'll see what the actual announcement is. I've heard it may unlock maybe 11 or 12 billion over 10 years, but that's well short of the hundreds of billions and the transformational shift we'd like to see. Lastly, as Rob said, IDA replenishment will be on everybody's tongues this week. There's reasons, on its own merit, countries are struggling. Like it needs to be sort of the biggest IDA replenishment ever, but also sort of for the political dynamic. The rest of this reform agenda, the IFA, International Financial Architecture Reform Agenda, rests on the idea that countries could form consensus on a lot of these proposed reforms, technical reforms. And if the IDA replenishment doesn't come through with a very healthy number, then you may lose some political momentum for the reform efforts. Some countries, I think Denmark has already set down, they are going to improve their IDA pledge from last time. You may see a couple other countries say something similar or not, but I don't think we'll see final numbers until December. But I would also say that because of exchange rates and inflation, even if countries sort of assume historical contributions, they're going to be sort of running in place because the money won't go as far. So we'd like to see contributions hit about 30 billion to mobilize 120 billion is sort of what the CSO community has thrown out there, but to be determined. Laura will touch on potential country platforms announcements, so she'll come back to that. But I think it's also just important to note what's not said. What we're not expecting would be any conversation around sort of general capital increase, which would be sort of the last major component of increasing the size of the NB system. So I think all of these other reforms that they've done over the last 2 years are fantastic, but you know, it's time to move past sort of the better bank and get to the bigger bank reforms if we're to have any chance of sort of success in Baku or otherwise. So there are a few other points about sort of shortening project prep time, a few smaller goals, continue developing the incentive methodology for global challenge lending. But if anyone cares to follow up with more technical stuff, we can provide emails after this. So that's about it for the World Bank and MDB system at the annual meetings. But I will now pass to Lara, who will tell us a bit about finance delivery and country platforms. So Lara, please.
Hi, everyone. A pleasure to greet you. My name is Laura Sabogal, and I am a senior policy advisor in the Public Banks and Development team working across the board and in the IFA reform agenda. So I think my colleagues have painted a very complete picture on the need for reform and why we're doing it. But I think, as Danny was saying, there's a big question on the delivery and the pace and the scale to achieve the mobilization of the resources that we need to reach a climate safe world, which is also compatible with the development needs of different countries across the world. So in that sense, although the country platform discussion, and I know that there's been some recent interest based on some announcements from countries, it is definitely not a new discussion. It's been there for a really long time, but it of course has gotten some traction again as it has surfaced and emerged across different fora. So we saw it as one of the key centerpieces of discussion in the Task Force Clima agenda from the G20, the Brazilian presidency that brought together the finance and the climate ministries in one room to tackle questions around finance and how to, and part of that agenda really placed country platforms as an effective mechanism to coordinate the support of different donors and actors to realizing that vision of countries, right? And I think that very much aligns with the push for making sure that this remains a country-driven discussion. And similarly, we also saw the MDB group, which is now chaired by the Inter-American Bank of Development, by the president, Ilan Golfan. After the spring meetings, there was a retreat hosted by Ilan Golfan, along with all the other MDB heads, where we actually got a viewpoint note of their vision for their collaboration. And again, we saw a very, very clear push for country platforms as being one of the options where they saw some potential. And of course, we cannot forget the discussions on the IPG side, International Partners Group, on the jet piece and the next generation jet piece or PJets or so on. And lastly, of course, the NDC update that we are expecting next year, hopefully by February 2025 when the deadline is there, right? And how Simon Steele has been pushing for this new round of NDCs to really be rather investment plans, right? So I think this is a little bit the background on the traction. And definitely what we have seen is has been a lot of dialogues across all of these fora and some progress in terms of establishing what are those principles that can guarantee that this effort can remain rooted and firmly anchored on national priorities, whilst still, taking some of the lessons learned from this previous set of country packages, country platforms, which are not only on energy from the JETP side, but also on country packages on nature, for example, that France and the UK has been pushing. I think recently what happened in New York and what we're looking at the annuals is the crystallization of some of those dialogues. So we are starting to see some countries that are coming forward with some sharing their vision of what that transition pathway will look like. We saw during New York Climate Week, Colombia sharing some of that vision with donors and philanthropies, announcing that it will be disclosing further details during COP16. We also saw now with Task Force Clima happening during the annuals, the conclusion or the last meeting of the ministers, there's also a discussion of how, let's say, where will the push for country platforms end up. And I want to emphasize how important this is because, of course, at the end of the day, all of these reforms are targeted to helping countries realize those transitions. So I think it's definitely something to watch out for, to see how the discussion evolves, both on the side of the MDBs and how that discussion on their collaboration and how they can bring together and harness all the power that they have collectively can help countries support this in these efforts, but also the discussion on the donor side, right? Whether we will see concrete proposals being surfaced, and of course, how the signal will be absorbed by countries, potential host countries of these country platforms, such as Colombia, but there's definitely others in the works, and how and whether there's scope to discuss country platforms beyond the energy, right? So more on the broader sectoral scope that will be necessary to achieve these transitions at a national level. So I think with that, back to you, Danny.
Great, thanks so much, Laura. It was really informative. So I think we'll stop that section of the briefing. So if people have questions, feel free to drop them in the chat. We'll start. I see they have a few in there already, and we will then continue on. Oh, Rob, I saw you. You answered with a nice long text message. I was going to toss the first one to you, actually, though. How far from a new Bretton Woods aren't we? And is there no fresh money expected? Do you want to take the first part of that, and I can take the second?
Sure. Sorry, that's Kate.
Try again.
Let's try again. There we go. Sorry I couldn't see you the first time around. So I'll take the first, and then after you've come in, Danny, I'll also take Damien's question on the NCQG. Firstly on Bretton Woods, so I think it would be fair to say that at the moment, with the political outlook this year, that we are quite far from getting the scale of new capital that you would need in order to realise anything that could be called a new Bretton Woods. What I would say, though, is that there is the G20 have laid out an ambition, or the expert group commissioned by the G20 has laid out a sort of a pathway for reaching a tripling of MDB finance by 2030, which is what a lot of E3G's work revolves around. To get there, you need to do two things. One is some of those technical adjustments around how efficient the bank's use of capital is, which basically means there's a bit of slack in the system, and there are ways of correcting that to get more money out of the door. The second is new capital, and it's that new capital that sort of is also needed and is a bit challenging in the current context. But the amounts that we're talking about aren't extreme. One of the things around the MDBs is if you are trying to mobilize finance, they're the cheapest and most cost-effective way of doing it. So if we all acknowledge that there is a challenge, then the most cost-effective way of meeting that challenge, and this is where it becomes more important rather than less important in a time where public finances are quite low, is through the multilateral system. Now, obviously, that needs to be combined with other things. It needs to be combined with reforms to the bank to make them better, to make them more country-driven, and some of what Laura was saying speaks to that. But if you can do those, then I think with the right political conditions, you can see a pathway to that realization of that tripling. But a whole bunch of things need to fall in place, and it's sort of one step at a time. Danny, you might want to elaborate on that.
Yeah, as far as any fresh money expected, I mean, at the spring meetings there was a fair. Oh, am I muted? Can you hear me?
Sorry, Danny, you were muted for me, but I think it's my end.
Oh yeah, okay. Yeah, at the spring meetings there was a fair amount of new pledging that happened, sort of ad hoc, new guarantee, new hypercapital contributions. I think the total was 11 billion to leverage 70 billion over 10 years or something like that. I don't think we're going to see that level of announcement at the annual meetings. I think the major sort of new flows that might be unlocked would be the equity loan ratio, which, yeah, again, might be 30 billion over 10 years. It's not nothing, but I think that's probably the main thing that's going to be announced. There might be another contribution or two on the sidelines, but even those, we also have to keep in mind that those have to clear domestic budgetary hurdles, as we know. In the U.S., just because there's a political announcement about a contribution, it doesn't necessarily mean that will ultimately be realized. So the short answer is no. I don't think we're going to see a ton of new money, at least at this annual meetings. So why don't we move back on to the question about NCQG in the chat and what a headline number might look like and what the blend is. Rob, do you want to take that? And then maybe we'll skip ahead to a question on debt for Kate, and then I'll come back to what a bigger bank might look like. So Rob, please.
Yeah, thanks, Danny. And we have a lot of conversations about this because there's what is good as in what is actually consistent with the level of need that you'd have, and then what is good as in what is a sort of big step forward from where we are now and a pathway to go even further over time. And if you look at the moment, the sort of status quo, if you don't get agreement at COP, is a rollover of the 100 billion. And actually, even if you just adjust the current delivery for GNI and inflation, then you should be getting to about 200 billion or thereabouts in the early 2030s. So obviously you don't want that. I think there's a bit of a preoccupation with the headline number when actually what sits under that is really important. And I think it's really important that whatever is agreed, there's not any obfuscation around what the intention is around what counts. So you can get to $1 trillion easily if you say, we'll just include all private finance everywhere. So I think there has been some consensus within the process that the goal should have two components. One is sort of what's being referred to as an inner layer, and that's more of a conventional support analogous to the 100 billion. And if you look at the projections for where we're headed there, if you were to get into the hundreds of billions, that wouldn't be quite consistent with the challenge, but it would be a lot better than where we're at now and where we're headed. And so I think if we can push it into that direction as an outcome, at least as a sort of interim outcome, that would be significant progress. What you would need to then see within that is a pathway to further increase that. So next year we have, coming into Brazil, a discussion on the role of carbon taxes and international taxation. You've got lots of discussions in the G20 around the billionaire tax. I think effectively countries are going to be left with a choice of either a goal that is very aspirational but rests on a whole bunch of other things falling into place, and there's therefore sort of not a huge amount of accountability behind it, or is multiple times the magnitude of what we have now, and with a need to go further over time. And it also needs to have that outer layer, which is more around the private finance and the mobilization to emerging markets. But there needs to be, what's really important is that there's also a way of whatever that outer layer is, monitoring it and figuring out if money's not flowing, why. Because that could be because there's not enough support flowing. It could be that we're not doing enough to mobilize those innovative sources of finance, like using international carbon taxes to reroute finance. And it could be that there are sort of broader macroeconomic conditions like fiscal stress and fiscal headroom. And what the goal can do is just provoke that forward discussion. So I don't think we're too wedded to the number of $1 trillion, and I know others have been. What's really important is that there's a pathway, and that pathway will only emerge if there is a significant move from the current providers of finance, and by that we mean the EU, the US, etc., to actually put something on the table that provides that pathway, and that's going to be really important. Thanks.
Great, thanks, Rob. Why don't we jump around a bit just to hear from all of our panelists? There's a question in the chat about debt relief discussions and what the IMF is doing. I would toss that over to Kate, and then Lara, if you'd like to come in on it as well. I know you've done some work in that area, so please.
Okay, thanks. So I'd like to quickly touch in on the question where Rob gave a written answer about the US election, because Rob did leave a little placeholder for me in that as well. So I'd actually like to sort of just say more about the G20 than the IMF, where I think what Rob said about the World Bank would apply pretty similarly to the IMF. What we've seen previously under the Trump presidency with the G20 is basically constructive work on finance that related to climate or sustainability slowing to an absolute trickle. And at this time when we do need big global reforms, an essentially frozen G20 is going to be a big challenge. It will be problematic. The fact that the G20 Sustainable Finance Working Group is called that is actually a legacy of the last Trump term, because it used to be called the Green Finance. It wasn't the working group, it was something else. The Green Finance something. And then it got elevated to a working group. And they had to change it to sustainability, basically to enable it to get past the US government and kind of be allowed to operate at all under a Trump presidency where climate was frankly a forbidden word. So that will be an issue, short answer. Then over to the debt question. So Chloe, I did mention a couple of things that are relevant to this when I went through the IMF stuff. Obviously, there's the Resilience and Sustainability Trust, which is specifically designed to support climate vulnerable countries. And also, as I've said, we are very encouraging that the IMF follows some of the MDBs in putting climate resilient debt clauses into its operations. But again, I'd kind of like to take this a bit up to the G20. This isn't just something the IMF can solve. This is something that finance ministers collectively can address, and they will be meeting next week, both in the normal kind of finance minister forum that is in the G20 that sits beneath leaders, and in the TF Klima configuration, which is finance ministers and climate ministers working together. They can potentially help to push forward the agenda on how to deal with debt restructuring and so on. I must say, the signs so far this year is they're making very slow progress on that, and the way the multilateral debt is dealt with is very complicated. It isn't all amenable to just G20 decisions. You have specific dynamics with China. You have specific dynamics with some of the large private creditors that own sovereign debt from developing countries. So it is difficult. But yes, we would like to see good progress from that out of these G20 finance ministers meetings. Thanks.
Laura, do you want to add to that?
Yes, perhaps I just, on the basis of what just Kate was mentioning a little bit, we will see, or we are expecting to see some movement around some reforms of the debt sustainability framework, which is a tool that is used currently by the World Bank and the IMF that essentially helps determine whether the debt acquired by a country is sustainable or not. And from there, it has a series of implications, including when a country actually reaches debt relief. The analysis undertaken by this tool by the World Bank and the IMF also determines how much debt relief a country can get. Of course, it's not the only way that this is assessed, or like the credit worthiness of countries, because we also have, of course, credit rating agencies and let's say other elements of the system, but it's really important. And so what is happening right now is that this tool is actually being looked at by the bank and the IMF to essentially come up with some reform ideas. We also know that the expert review on debt, nature, and climate, which was championed by Colombia, Kenya, France, and Germany, is undertaking a similar enterprise. And so the idea is to come up with some recommendations. And these recommendations should really be targeted at making sure that developing countries, both emerging economies, but countries that are at an earlier stage in their development pathway, can have an architecture that in terms of debt that supports the mobilization that we need, right? Because at the end of the day, we know that we cannot mobilize, or we cannot talk about mobilizing the trillions if the countries don't have the fiscal space to absorb it. So I just wanted to flag that as something to definitely watch out for during the annual meetings. Thank you, Dani.
Great, thanks everybody. Just put a call out to everybody on the line. If you have more questions, please, by all means, drop them in the chat. We've got a few more minutes to keep entertaining questions, so definitely encourage you to take advantage. But yes, the question about what a bigger bank would look like. Many of you may be familiar with the report that the G20 put out, I believe it was last summer, about tripling the size of the MDB system. There wasn't a bank-by-bank breakdown in that, but roughly the numbers were, I think if the baseline was last year, I think it was something like 130 billion for, not just for climate, but for climate, SDGs, nature, basically sustainable development writ large. In order to hit climate targets, GHG emissions targets, and finance targets by 2030, you would want to triple that lending size. So that it's 390 billion annually in lending. So 260 billion in new lending. So call it roughly a $400 billion MDB system annually. We've had some of our researchers here at E3G do some literature review. They find those numbers to be pretty credible. So I think we can stand behind the G20's research in that sense. As far as a bank by bank breakdown, the World Bank, as sort of a primary lender for emerging markets, would maybe account for up to half of that increase. I mean, it really depends on how you want to slice it and what shareholder preferences would be, and the efficiency measures that some certain banks have undergone. The Asian Development Bank, for example, has unlocked a lot of money with its CAF reform initiatives. So I would say we are not on pace to hit those numbers yet. We'd like to get there, but really that will involve recapitalization efforts, and then you get into sort of political discussions about how shareholding is renegotiated. For example, if the bank really wants to draw lots of new contributions in, it will likely have to address the question of whether to allow China to have a larger percentage shareholding, and that presents geopolitical issues with the US, with the EU. Those are questions that political leaders would have to answer, not necessarily finance ministers. So there are a lot of issues to unpack there, and I'd probably leave it at that. As far as realistic numbers for IDA replenishment, I would say right now, most treasuries are playing it pretty close to the vest. We haven't heard about too many numbers being tossed out publicly or even privately. I would say that the worst case scenario is probably just the business as usual. Everybody just re-ups their 2021 pledges. But as I mentioned, in real terms, that would represent a decrease, which would be, I think, a pretty disappointing outcome for the bank. So I don't want to put a number on it, but I would say somewhere between what happened at IDA 21 and like I said, the $30 billion goal that they would be shooting for, that could leverage, over 100 billion, 120 billion. So I think realistically, that's the number is going to be somewhere in the middle. So if that answers your question, I don't see any more questions in the chat. So why don't I give everybody a minute to to think about that. And in the meantime, were there any other issues I would ask maybe my fellow panelists that we haven't gotten to that you might want to raise? And I know we've got sort of an expectation that Laura, please come in.
I think on the IDA replenishment, I think not to repeat what you just said, but of course the IDA, let's say, window doesn't only support climate issues, right? It supports issues across the board. And as we see more volatility geopolitically and more pressure, there will be, of course, more pressure on those resources, right? Which are highly concessional. We were talking about grants. And so that is that is the rarest of the types of finance that really needs to be protected. So I think wherever we land on the replenishment, we just need to make sure that the rate of decrease, or I'm missing actually a word right now, but essentially it's not depleted, because then that will be a challenging part, right? So we just need to make sure that the pressure is somehow compensated by this new contribution, because it will become more and more pressing as time goes on, as we are seeing across the world due to the several things happening right now.
Great. And I see Rob has his hand up. So Rob, why don't you come in?
Yeah, just two things quickly. One is just on IDA. I just had this very UK specific point for our UK-based colleagues, just that the UK's IDA replenishment last time around was so diminished, having previously been amongst the largest and for a long time the largest donor to IDA, that even if it doubled its contribution now, it's still a lot lower than it was before the last replenishment. And that's just worth bearing in mind for context. And obviously the UK's wider ODA context is very challenging at the moment, but that I think is an important nuance. And the final thing I just wanted to say, what's worth also taking into account, and this is sort of what we were getting at with the new goal discussion, is there is a risk that a lot of the countries that will be providing to that goal are effectively running spreadsheets to tot up what current levels of commitments will already get them to, and presenting that as the goal, which is not the point of the goal. It's supposed to be an increase in ambition. And there's actually a bit of a synergistic cycle between this wider MDB reform agenda and the goal, if the goal is ambitious enough, where that can actually build some political momentum for some of these outcomes in the sort of real world and in the development banks. So it is worth one plea to sort of, if we can all create that positive narrative around that interaction, I think that could be really helpful for the politics. Thanks.
Great, Laura, do you want to touch on that, and then we'll go to the question in the chat?
No, so it's not on IDA. I just wanted to make another point on the quality of the finance, because I think we've been discussing a lot, like the bigger, and of course the quantity is absolutely crucial. But I think we need to remember that the money that's available, especially when we're discussing concessional and grant money, which is of course very scarce, we just need to make sure that that is really going to the right places, right? And that again is, I think, something that is getting a little bit more traction with all the discussions around national transition planning, country platforms. I think we have our associate director Kate, who leads and amongst the many things that she leads a great effort on transition planning for the private sector. But that is a fundamental piece, because in the end we know that if the conditions are not there, if the policy frameworks are not there, if that vision and that trajectory is not charted out by the countries with the support of the different stakeholders, the different donors, the different MDBs, it will be really hard for the money to flow where it needs to flow. And that will have, of course, a detrimental impact in terms of the ability of the country to attract private capital, because even if we would get like perfect numbers, we know that the needs are so high that no public pot of money can really cover them completely, right? So I think that is also something that is very important. There's a question, of course, on like enlarging the system, and that's fundamental, as we've been talking about throughout this hour almost, but also the quality of the finance and where that finance is going to unlock further resources is absolutely key.
Yes, absolutely. Not just quantity, but absolutely quality. So I see there's a question in the chat, which I think is related to sort of the climate goal for the UN and contributor-based expansion. So Rob, do you want to build that one?
Yeah, and I was EU negotiator prior to Brexit on this issue. So I think that there is a pathway to broadening the contributor base, and actually there is a reasonability to the argument that there are lots of countries that are wealthier and higher emitting now than in 1992. I think that argument has been made quite clumsily in an international setting, and that's led to giving the impression that what countries want is for, diluting the accountability of the existing contributors. And for some that might be the case, but I know there are others for which it's not. But also that should be therefore bringing in everyone, and all countries need to chip in. And actually, there needs to be a more refined dialogue around this. Is basically a small number of countries that are symbolically very important for the politics of this and for the real material contribution. So I think there is a pathway to a flexible outcome. You've already had things like, countries like the Republic of Korea come out years ago at leader level and say they would like to contribute to a future goal. They don't have to at the moment, but I think it's about making it very much a sort of a voluntary opt-in. And if that can be done, I think there is a pathway. It does feel like it would be quite hard for a country to politically put their hand up and say, no, we don't want country X to contribute, even if they want to. So I think it's just about reframing the debate. And I think there is a pathway, but it's very difficult and it needs much higher level political orienteering. The other thing, I think, addressing some of those concerns that Laura raised around quality of finance is really integral. So if the EU and the other sort of significant providers of climate finance can answer some of those questions around what exactly does this money look like? Is it all lending to countries that are in debt, or is it at least including a significant increase in sort of concessional and grant-based finance so that it's helping them with their debt distress rather than just perpetuating it, to which there is a limit, then that will also be really helpful. Thanks.
Great. Well, there are no further questions. Then maybe we should wrap it up there. I'd like to thank all of my fellow panelists for showing up and offering their contributions here. It was hopefully informative for all of our guests online. I guess if you have any further questions, please email press@e3g.org, and our staff will put you in touch with the right advisor here at E3G. And I also encourage you to sign up for our WhatsApp communications, our WhatsApp blasts. We'll be on the ground in Washington next week, reacting to news in real time. So that should be hopefully a useful tool for you. I think that's about it. Hopefully you have our contact information. If not, it's all online. I'm sure you can get in touch with us. But yes, unless anyone has any further comments, I think we can wrap it up there. Thank you so much for joining us. And as I mentioned, we'll be on the ground in Washington, and we'll maybe do one of these ahead of the spring meeting next year. So thank you so much. Bye, everybody.
Thanks.